Hello, it's Adil bringing you a review of the FTSE 100 for Tuesday's trading, the 17th of June 2014, bringing you an intermarket analysis perspective. Okay, so today's trading, good day's trade, managed to bag 115 points on the live analysis service with subscribers. Obviously a good day, given the last 2 or 3 weeks have been pretty poor really. Last week just about managed plus 60 for the week, and the weeks prior to that, as I said on Twitter, were minus 50, minus 60 weeks, so which is quite rare really for me to have two losing weeks, to be honest with you. But having said that, the market's been really hard to read ever since Mr. Draghi and his QE carrot. He's still dangling it till this day, and even today there was a comment out with regards to that. That's why I went short in the afternoon. It's all about the euro really with regards to Draghi. Obviously when euro goes higher, then the European indices go under pressure. But that's not the case with regards to the FTSE. Oh, that can go on and on. Okay, let's just try and focus on the FTSE for now. Okay, so we start the day off, okay, given the fact that obviously the geopolitical concerns dominate. Okay, so we've got the Iraq situation with the Sunnis and regaining power from the Shiites. Okay, so that's obviously doesn't bode well for the Americans, because the Americans in reality are in bed with the Iranians, and they want to support the Shiites, so they gain power. So obviously when the Sunnites start gaining power, then obviously it doesn't bode well, does it? I mean, you've got the proxy war going on now between Saudi Arabia and Iran. The Saudis are pumping money into Iraq, arming the Sunnis to the teeth, so that they can fight against the Shiites. Okay, and who's benefiting? The Americans, because the arms industry obviously is certainly a very lucrative industry, and obviously if they can create two nations to fight, and they're selling arms on both sides, then hey presto, life's good, and it's all about making money. Okay, so it's a dirty game, folks, politics. We try not to obviously get stuck in. Our job is really just to read between the lines. That's what we do, and obviously if that means risk off, it means risk off. We short the market. If it's risk on, it's risk on. We go long on the market. I don't really care which way it goes, just as long as we have the ability to read, discern, understand, foresee, and have the obviously the insight, etc., the hindsight, foresight. You call it what you want. Okay, it's basically it's the ability to read the tape, and that's all that a day trader cares about. Okay. Now, obviously, the Ukraine situation as well, with the Russians cutting off the gas supply, so obviously that doesn't bode well, and obviously the Russian embassy being attacked over the weekend as well. So geopolitics was the predominant theme, hence the reason why the Nikkei was down overnight, and the yen obviously appreciated, because as we all know, money generally tends to flow to three main currencies: dollar, the Swissy, and the yen, whenever there's uncertainty or geopolitical fear. And that obviously caused the Nikkei to fall by 1%, because it's very sensitive to the yen, given the fact that they're trying their QE experiment, although it is coming to an end over there. Okay, so that was the situation there. So I went short early morning. I went short the DAX, short the FTSE, I was short the Aussie, short the Nasdaq as well. I think at once, yeah, I was short the Nasdaq overnight. From Friday, and managed to close my shorts as the markets failed to push lower. Even with higher inflation data in the Eurozone, the German DAX failed to push lower. So bear in mind that the Shanghai was actually up for the day, so there was a conundrum there where you had the Nikkei lower due to the obviously the geopolitics and the yen appreciating along with the dollar and the Swissy, and that obviously the reason why the yen came under pressure. Then obviously the FTSE and the DAX was generally supposed to go in tandem with that, given the fact that geopolitical affairs dominate. Then you had comments out with regards to the Americans in bed with the Iranians, and trying to broker a deal, and the Iraqi PM coming out and stating that he's not going to declare a state of emergency. So that obviously the geopolitical concerns were alleviated. Then the Russians, although cutting off the gas supply, the Germans and the Europeans came out and stated that there will be no concern for its citizens in the European Union, so gas supply will continue as normal. Okay, so it's just an isolated case. So therefore, the two main concerns with regard to geopolitics were cast aside, and that allowed the stock market to rally. So the Nikkei being sold off by 1% was obviously pushed to the side, and the Shanghai index being higher, that obviously started to dominate. So given the fact that the US markets were resilient, and the Nikkei obviously, the Nasdaq obviously had an inverted head and shoulders pattern, and off we went to the races. Okay, so the initial outset was bearish, as you know, because you've got this is the daily chart of the FTSE 100. We'd broken out the symmetrical wedge, and therefore hence the reason why the bias was bearish, because we're going lower, potentially to test the next level of support around the 6700 level and the 6660 level. Those that are on my fundamental analysis service will already know that I'm swing short the FTSE from 6670, and I expect 6770, and I expect the FTSE to hit the 200 MA. That's even lower, to be honest. Okay, that's my target there. Okay, so from a technical perspective, that's basically where the FTSE 250 again had an inverted head and shoulders, a failed bull flag, and obviously went lower, although the 200 MA was holding. That's one of the reasons why I switched my bias to the long side. Okay, and those that are on the live analysis will know. And given the fact that the previous resistance was acting as support, hence the reason why I cut my shorts and I switched my bias to the long side, as you all know. Okay, those that are on the live analysis service, okay, will know. I closed my shorts, switched to long. Okay, so basically, what do we have here now? So I've pinpointed here the key areas that we're going to be observing. Okay, I'll put my trend line in there. There's a potential trend line over here as well. Let me just get this drawn in. So that's two lines. This is a downward sloping pattern here. Obviously we broke out to the upside, quite a substantial breakout there. Okay, so that's broken out. Okay, other than that, there's nothing really else that we can see. Okay, so basically what do we have here? We have a base that's being built around the 6750, potentially 6740 level, so we'll watch out and see exactly what happens. It's all about China, and see what happens with China overnight. Now we do need to be aware we need to be aware above the above. Okay, unfilled gap here at 6840, and unfilled gap here higher at 6870. So as a trader, always be aware they're going to act like magnets, and that's going to force price action higher. So again, that's certainly something that's of concern to me. That's hence the reason why when the markets failed to go lower, then obviously I had to switch my bias and realize that those gaps that will remain unfilled are going to act like magnets and force price action higher. So that's something that I'll certainly be aware of. And obviously if geopolitics dominate, then that's out of the equation. If we have any other shock, then obviously that's out of the equation, and lower we go. Okay, so 60-minute chart certainly doesn't look well or look healthy at all. Lower lows, lower highs resume. That's why I was short from the outset in the morning. Obviously we've had a bullish engulfing candle, although we have a topping tail and the market sold off towards the close. Still at the moment I'm not sold on the bull side entirely yet. I'm going to remain neutral for now, although this lower low, lower high, the lower low isn't as convincing as the previous lows, and the lower high itself as well is not convincing. So I'm going to reserve my judgment, okay, and we'll see exactly how Asian markets react overnight. The reason why I say I'm going to reserve my judgment is if you look at the Shanghai index, what do you notice? Inverted head and shoulders pattern. So if the Shanghai is going higher, where do you think the FTSE is going to go? Obviously go higher. Yep, okay. So just bear that in mind. That's something that we certainly need to take into consideration after a base is being built here. That's my only argument on the upside. Excuse me, I am absolutely shattered. Okay, so basically if we look at the Nikkei, where art thou Nikkei, where art thou Nikkei? Let's have a quick look at the Nikkei. Have I even got that opened here? No, I don't have the Nikkei here at the moment. Okay, well, oh, there we are. Okay, so Nikkei, here we go. So basically the Nikkei itself, although it hasn't been updated unfortunately, which is a shame really, but basically we are at on the Nikkei at present, given the last close that we've had. One second, let's just quickly look at the Nikkei at present. Okie dokie, so we closed around the 14,900 level, so we're just below. We still have the bullish candle, although we do have gap fill resistance. Oh, the next gap that we do need to potentially close is going to be up here. There's your next gap. Okay, so Something we'll keep an eye out for that. So that's something that certainly needs to close. But that will be based on another arrow being fired by Mr. Abe. So that's going to be quite interesting, actually. Okay, let's give it some time. Let's see how Asia plays out, and then I'll have to take my cue from there. Let's just go to the smaller time frames now. Okay, obviously, as you know, I switch my bias and switch my bias again. Okay, let's go to the smaller time frames. 10-minute chart I've already covered. 60-minute chart I've covered now as well, so that's fine. Let's go to the FTSE 250, see if we can see anything there. FTSE 250, you had this unfilled gap here, which obviously has been filled now. Then you've got potentially another unfilled gap below, and certainly lower lows, lower highs. So again, this is not looking bullish at present, although remember, like I said, on the daily chart it's at the 200 MA, so that's something that we're going to keep an eye out for. And obviously adding the fact that the Chinese market is certainly looking bullish as well. So basically, what do we have here? So geopolitics was a recurring theme in the morning. That obviously the concerns were alleviated. Then obviously we had the higher inflation data came in line. So again, that was negative for the European stocks. Okay, now we've got Americans trying to resolve the concerns with regards to Iraq. The Ukraine situation seems to be quieting down. Okay, so the only concern now will be watching the euro. Okay, and also adding the fact that the US data came out overall quite strong, so that again alleviated any concerns about slowing growth, especially with regards to the retail sales last Thursday, and then the lower inflation numbers as well. So that was another factor. But the main story, or the main headline, will be going into Tuesday will be ECB likely to refrain from new measures for next few months. Okay, and that was Bloomberg. So the fact that the ECB is not going to do any more QE or pump any more Kool-Aid, then the long side of the equation on European equities certainly is limited now. Okay, because the fear of the short squeeze, or fear of missing out on a potential central bank intervention is no longer there. Therefore, obviously, the bears are now going to get a second wind, or a second chance here to short this market. So expect European equities to be under pressure, especially given the fact that the euro started to pop now to 1.3570, and that obviously doesn't bode well for exports the higher it goes. So again, it's all about the euro with regards to European equities. With regards to the FTSE will be dictated by China, Aussie and Kiwi. We'll see exactly how they react overnight, and again, we'll have to reserve my judgment for now. Also, higher oil prices, that's what the FTSE will be dictated to, or global equities will be dictated by as well. So again, keep an eye on any news from Iraq. Obviously any signs of reconciliation, any signs of a de-escalation of tension, then obviously that bodes well for global equities as well. So overall, that's how we're poised. Now, the only concern that I have, not with regards to the Asian markets, what I do have a concern is with regards to the S&P 500. On the daily chart on the S&P 500, as you can see, it's a classical bear flag scenario. You've got an inside bar, 2 bars inside, and bang, down we go. Test the previous previous resistance equals support. Same thing with regards to the Dow as well. This is something that I need to keep an eye out for. The Dow Transports have led the markets higher. What do you have here? Bear flag formation, down we go. So the Dow Transports, the Dow Jones, and the S&P 500 all have bear flags on there. So what does that mean if there's a bear flag on there? It means that the FTSE is going lower. Okay, so given the fact that the FTSE itself, or FTSE 100, has broken out this symmetrical wedge pattern, there's nobody that can justify to you that this is a bullish pattern, this is a bearish pattern. So the next level of support, what is it, 6660, probably even lower. So it's a conundrum right now. Okay, real conundrum. This is why as a day trader it's not easy. Okay, it's very, very hard to read the bias between the markets. Also, with regards to your biotechs, the biotechs are the ones that have led this Nasdaq higher. And what's happened to the biotechs? They're stalling. Even though the inverted head and shoulders target is not being reached, it's still stalling. Nasdaq itself, what do you see here? Inverted head and shoulders pattern failed to play out today. What do you see here? It's a potential H&S formation lower. Why is it an H&S formation? Because you've got your left shoulder here, you've got the head that's been put in here, you've retested the neckline, looking for a right shoulder, and down we go. Okay, you've got the unfilled gap there, so you're looking at 200 MA, 3680. So that's the potential target on the downside. You take the high, you take it to the low, and we're below the 75% for the right shoulder. So again, doesn't bode well. Also, given the fact that the red candle is dictating and everything is within that, consolidating within there, bear flag formation, down we go. So can you see the conundrum, folks? Okay, you should be able to see the conundrum there. So you got the Shanghai, which is strong. Okay, then maybe that's strong due to some potential front running of any potential more stimulus in China. I don't know. Okay, I just don't know. All I can do is react, okay, not preempt. So keep observing the obviously risk FX as Mr. Murphy, and that's because I'm a student of intermarket analysis. So risk FX, that's how what I call currencies. Risk barometer there for currencies, see whether risk is on and off. You observe the bond market, obviously the yields are a big factor right now. Then we observe the commodities market, so obviously given the fact that we've got geopolitical concerns, gold and oil will be dictating direction right now, so keep an eye on them. Okay, Mr. Copper, poor chap, obviously suffering, but certainly was higher today, so given the fact that Shanghai index was higher, so China dictates commodities. Okay, and indices. Okay, so indices stroke equities, and obviously that's the dilemma that we're facing right now. You've got Shanghai higher, Nikkei lower, you've got European stocks flat, and then US markets more or less flat. So we need more clues. Okay, so as a trader we're like Sherlock Holmes. Okay, and some of us have the benefit of using Mr. Watson, others don't, and we're constantly looking for clues to read the market for the next direction. Okay folks, I think that's enough now. I'm starting to waffle, it's getting late, I'm tired, straight to bed. So risk on, risk off, wax on, wax off. Goodbye.